kicking off that recording, and your hosts, as usual, are Jamie Hodge and Andy Linloff. Jamie Hodge and Steve Gomez on Mondays. So you'll find that recording tomorrow. Hey guys, how was Monday?
Hey Scott, what's happening? Steve, what's going on in your sunny neck of the woods?
Not much, just another Monday, except for, the elephant in the room tomorrow.
I know. Well, welcome back. You've been on a little well-deserved hiatus. Welcome back.
Thank you.
You're right. Tomorrow's the big day, election time. So, well, let's just say it's going to be interesting. November 2nd. Here we go, ladies and gentlemen. October is in the books. Hope everybody had a happy Halloween. And before we get rolling here, just a quick moment to go over the disclaimer. We're all big boys and girls here and just want to make sure that you're aware of the fact that all the information that we share with you in these webinars is for educational purposes only. So if you need investment advice, please seek out someone who's licensed and can legally dispense that type of info to you, someone like a registered investment advisor, maybe a Series 7 licensed stockbroker. But in other words, just somebody who's licensed to dispense buy and sell information to you, or recommendations for that matter. Once again, everything we share with you guys in these webinars is for educational purposes only. Always like to take a little bit of time here at the top of the hour for the new people to tell a little bit about the community that we've built around the technology that is Trade Ideas. And of course, it all starts over here with the Trading Room hosted by Barry Anderson. Barry opens the doors there about 30 minutes before every open, and it's a great place to be, whether you're brand new, in the middle of the road, or a highly seasoned trading veteran. We got people from all walks of life in there. Barry does a fantastic job at showcasing his trading style as well as the way that he uses the scanner. And he's also very good at answering questions. So nice thing about the Trading Room is there's no charge to get in there and be a part of the community. You don't even have to have a subscription to get in there and see what it's all about. So if you haven't been using that resource, by all means, take advantage of it. When it comes to the 5 p.m. Eastern webinars that we're hosting Monday through Thursday, obviously you get myself and Steve on Mondays. Steve's going to take the steering wheel for the Trade of the Week on Tuesdays. Break it up just a little bit here on Wednesdays. Bring in Dan, our CEO and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams. Always entertaining with those two. Then Andy's going to round out the 5 p.m. Eastern slot on Thursday with Andy's Trading Studio, and I'll be riding shotgun with him on Thursdays. And of course, every Monday, Tuesday, Wednesday, Thursday, Friday, we have our daily support session starting at 12 p.m. Eastern and going until 1 p.m. Eastern every weekday. And you can access that live support session by simply going to trade-ideas.com/live. As you can see in the bottom left-hand corner there, it's always the same bat time, same bat channel. So once you bookmark it, you can always easily get there. When it's not the live support session, Barry is also streaming the Trading Room as well. So just another way to access the Trading Room if you don't want to go through the process of signing up the traditional way. Of course, I would always recommend that. That's where you get the most bang for your buck. But we are streaming the live or the Trading Room outside of the live support session as well. And of course, accounts are on the move. As you can see here, we're probably going to have another big bump in the first quarter of next year. Still got a lot of people in the markets that used to not be in the markets due to the current thing that's out there that's keeping everybody home. A lot of people have started to go back to work, but still a big portion of people not going back to work. Whether that remains or changes, I guess we all have a front row seat moving forward. Let's hope for the best. And Brokerage Plus. Not too long ago, it seems like just yesterday, but it's been many months since we released the first version of Brokerage Plus, which is compatible with Interactive Brokers. This chart shows you demo orders as well as live orders. They're being pumped through Interactive Brokers. Of course, we'll be adding more data eventually, but the bottom line is whether it's live orders or the orange demo orders, they seem to be increasing substantially month over month. And once again, this is all just Interactive Brokers volume. We're getting very close to releasing a Ameritrade version of Brokerage Plus. That will be our first foray into the zero commission universe, which is very exciting. So we've currently got the Ameritrade version in testing. When will it be out? Don't know, but it's never been closer. All right, as soon as we get to pound on it for a little bit, get the bugs worked out, we should have that first release version out relatively soon. So it's getting very close for another BD other than Interactive Brokers. And Steve, I don't know how much detail you have, but you know what we were talking about the other day about what might be happening with Interactive Brokers as well.
Oh yeah.
Which, you know, I don't feel like I'm letting the cat out of the bag here too early, but eventually, based on some conversations that were had with IB, eventually we're going to be seeing $0 commissions from IB as well, which only makes sense since all the other big boys are going that route. Wouldn't make sense for IB to keep on charging commissions for API orders, which is what Brokerage Plus uses. So stay tuned on that. Hasn't happened yet, but from what I hear, it's coming down the pipeline. So that's just a good development for everybody. All right, and here we are at today's agenda. Let me just go ahead and back out of this for a little bit here. And yeah, some interesting activity from the market today, Steve. I think the gap up caught a lot of people off guard, but hey, we'll take it. So if you're ready to talk about those big tracking ETFs,
Oh, sure.
I'm ready to kick it over to you here. Stand by. And you now have the baton, sir.
All right. Yeah. Welcome to my excuse me. Welcome to my desktop. I am back from a nice staycation. Didn't really feel like I missed too much in the market as we kind of broke down technically, especially in the Nasdaq. But for now, we'll look at the S&P like we usually do. Under pressure again for the most part. Looking at the averages here, we're crossing back a little. You know, look at this sine wave here of the fast line, the 10-period moving average. It's indicative of what you're kind of seeing mostly in the price. But we've crossed back below. We've got just a jumble of a mess here. It's going to become the armpit or the pocket at some point if the buyers show back up. But the point is, as I said earlier, the elephant in the room is everybody is waiting on tomorrow. And myself and the other guys in the other fund, including Jamie that we're trading, we're all just sitting on our hands because it really is just kind of a gamble right now from one, you know, not extreme to the other, but from one end of the range to the other. And hey, look at that. Our closing candle proved my point exactly. From one end of the range to the other and close right in the middle. No real opportunity on these types of days. So, you know, tomorrow we'll get another day of data, and then Wednesday we might have some more news to really filter into the market, and we'll see how that goes. And you're going to have one of two things. You're going to have either the most obvious, you know, double top that we've seen in a while, you know, cat double top there, right? Or we're going to have the low end of a range of where I've said sometimes you need to pull the arrow back before you can blast it forward. My crude caveman drawings. So we don't know, and there's really no point in trying to pick a direction. And yes, that's why, Dave, I said trade of the week is cash, and I need to remember that there is a symbol called cash, and it didn't look that bad coming into today, but I wouldn't chase that chart. But good thing that Dave read beyond the headlines, always a good example as to why not just read the headlines, at least try and read the first couple paragraphs, what the hell's going on. So it talked about there's no real reason technically, as we just looked at here. Let's look at the Qs, our leadership ETF, even more of a collapse below the 50-day. We've got 1, 2, 3, 4 days now below the 50. Crossings happening over there too. But you know, for the most part, held our own. We will see what's going to happen. So the reasons for cash, there's a giant catalyst tomorrow night. We don't know what's going to happen. So what's the point in loading up on one side? However, I must admit, you know, even though I am light, I was looking for some ideas today, and I found an idea only because maybe there's a sector tell. Maybe the market's giving us a bit of a tell here, Jamie, whereas the difference is pretty stark between the two candidates. One doesn't want anything to do with fracking or oil independence. The other wants everything to do with oil independence and continue to grow that stuff. So maybe the oil sector ETF, you know, the markets are always kind of predictive and people's money where their mouth is. lot of buying in the last few days over there. So maybe there's a bit of a positive tell happening over here in the oil service sector. So, I pulled up a typical one I saw in BP, and then I went to the similar tab, and long story short, I like to find something under 10. I decided to buy some SWN, Southwestern Energy, today. It's just been chopping back and forth in a range. Nothing really spectacularly technical of it, but it did bounce and test off its 200-day. It's under $5, maybe get some bang for the buck. So, just maybe a hint of a tell of what the market's leaning towards. And if that's the case, then this will not become a double top. This will become just the low end, as I said, of kind of a range at which we could be breaking out of to move higher. We shall see. But tomorrow, Wednesday morning, we should probably know, depending on how the market opens. Keep an eye on the oil service tomorrow. If they want to continue to move higher, then maybe there's some more positive confidence brewing for one of the candidates in that particular ETF. But other than that, Jamie knows what we're talking about. There's not a lot of bets being made. What was that symbol again? It's OIH, Raj. It's OIH. It's the oil driller sector. And then what you can do is you could say something like, okay, well, ConocoPhillips is a oil service sector stock. So we plug in ConocoPhillips when we go here to our single stock window and start going through the similar tab. And then I'd sort it by price. Show me the low price similar tab stocks. And for whatever reason, that one's not in there, meaning SWN, but you could put in British Petroleum or whatever they call it now, BP. But the similar tab can be very interesting if you're starting to look for ideas of things that you may not have been aware of. But to answer your question, OIH was the ETF for the oil service sector. Thoughts
Yeah,
on
and
the
Steve,
solar stocks?
what you were talking about, hey, one party wants to go green and get rid of fossil fuels and all that. Well, I think anybody that thinks a little bit deeply about that knows it's kind of a pipe dream, because, hey, you got an electric car. Most people are charging that car from a grid that uses fossil fuels. Okay. Right now, if you turned off all the fossil fuels, it would be,
they still need it.
Near enough energy from solar and wind, we'd be in the dark, right? So hey, it's a nice idea, but it's going to be a very long time before we gravitate away from fossil fuels.
And
that's just my humble opinion.
On the other side there, while you were speaking, I thought about that. I looked at Tesla, and Tesla's very much broken here. It kind of looks like the NASDAQ, 1, 2, 3, 4, 5, 6 days under the 50. It looks like it's the beginning of kind of a buffeting stall, and then we've got some other stocks that have just had incredible runs, run being one of them. But look at how the solar stocks have kind of really sold off lately. I don't know, maybe there's a shift. I was playing Plug Power and some of these other ones, and they had much deeper pullbacks than I thought they would. BE is another alternative energy. They've all had some serious deep pullbacks when, if we play the time machine game just a month ago, people were thinking green energy is the way to go. So maybe there's something going on there. I don't know. Just spitballing here. That's all.
Yeah. And of course, hey, everybody loves the green energy stocks, and the Teslas and the Neos and all that good stuff. Still going to be viable and volatile moving forward, for sure.
Well, as I pass it back to you, either Jan or Jan, I don't know if you have a as long as you have an IB account, as long as your account is with Interactive Brokers, yes, you can connect to trade ideas. It doesn't matter what country you're in.
That is correct. I was just looking at that question. We know this because a lot of the times when people are having issues, it's because they haven't converted their funds to US dollars, which sometimes you have to do that, sometimes you don't, but it's definitely possible to use a non-US account for Brokerage Plus. All right, just going to see if I can knock out any more of these questions before we jump into the content here. Fisker had a good run. Okay, I think we're good to go. All right, so let's just jump on into today's content. And as Steve was saying earlier, myself and Michael and Andy in our fund, we've pretty much zeroed everything out. No point in worrying about anything right now. And based on some of our prior trades, it's just swing trading is just a little too hard to call, a little too much risk right now. So why take that risk? So today was a good intraday day. Some of the things that I found, tomorrow is going to be more of the same type of alert hunting. So I've got some good things to show you guys, some pretty simple stuff, powerful stuff that worked today. So in keeping with tradition, I always like to take a peek at my favorite compare count window. And boy, these readings were not surprising at all today. Pretty much what I expected. Thought we were going to hit 50-50 there for a minute, but came out just a little bit bearish on the count, 51% compared to 49%. No big surprise there. So in my head, along with the gap up today, I'm like, well, don't really want to fight the trend, but I'm sure there's going to be some good shorts and some good longs, and there were some good ones of both. A little bit more long than short, but still some decent short signals, and we'll get to those here shortly. No pun intended. But Holly didn't do too shabby today. And that reminds me, I did see a question before we got rolling here that was about the AI. Let me see if I can scroll back up and see it. Right, please show an AI trade scenario starting at the market open. How does the AI support the trading? Okay, and Jan, we've got a bunch of AI videos on our YouTube channel. You just cruise on over to YouTube, look for the Trade Ideas channel. We've got a lot of videos on there, but I should be able to, shed some light on that topic here in a minute, because we're going to talk about Holly and how it performed today, or how she performed today, I should say, among the 3 modules. So, get my pen over here. If we direct our attention over here to the channel bar, we can see the 3 different AI modules here. Holly 1.0 kicking out 7 signals, clearly the producer for the day. And these values that you're seeing up here based on 100 shares per trade. So 7 signals out of Holly 1.0 for about $200, or what we could call 2 points. Holly 2.0 spitting out 6 signals, but only up about half a point after everything was said and done. Neo kind of laggy today, only spitting out 2 trades and was down about $168, assuming 100 shares per trade. Now, the channel bar over here is always going to be in the 100 share mode. Now, when we look at my screen here, my AI blotter here, along with the numbers that you're seeing down here in conservative, moderate, and aggressive profit, these are not based on 100 shares per trade. If I quickly pop into my tools and options and go to my AI trade sizing, you're going to see that I'm risking $100 per trade. So if that stop gets hit, I'm going to lose right about $100. But the system knows how many shares to get me in if I only want to risk $100 based on the price of that stock. Which is why it was a little surprising to see. Let's just jump right in here to XOM, probably the shining star of the day today, spit out by 1.0, 500 shares, risking $100, and we can see right here, what do we have? We had a 20-cent risk in a big stock like Exxon. Well, I'd say big, $30-something, but that's still a pretty tight stop. But guess what? It held tight today, and you could stay in that one with relatively low risk, which is why 500 shares was the number that you're seeing here. So before we move on here, just kind of want to sketch out what we're going to talk about with Holly, all right? First and foremost, I'd like to talk about the moderate and conservative spread, which if we direct our attention to these columns right here, here's conservative profit, here's moderate profit. Notice at the end of the day, sometimes we have large spreads between conservative and moderate. We're only seeing a $15 spread as of the close in Exxon, but it was a lot bigger during the day. VDE still holding pretty strong, a nice fat spread there even into the close, okay? So obviously when things are in play in real time and we're not looking back in retrospect, how might we extract a little bit of that spread, okay? And basically we do that by ignoring the AI's exit signals that it produces in conservative mode. And if we like what's going on with the chart, we can decide to ignore that exit signal and sometimes make a lot more than Holly does in conservative mode. Now, of course, Exxon took a little pullback into the close, so we gave up some of the spread. But we're going to kind of mix things together here. Not only do we like to talk about extracting some of that moderate versus conservative spread, but there are also good add-ons to Holly trades. And then we also have trade arounds. So we have 3 categories here: moderate versus conservative spread, were there any good add-on candidates, and were there any good trade around opportunities? So we're going to kind of mix in moderate and conservative spread here along with the add-ons. So Exxon was a great add-on play because, let me just expand this out a hair. We're looking at 5-minute candles here, and we can see 5, 10, 15, 20. We can see right here, 8:47, about 17 minutes into the open, we get the buy signal from Tailwind right here at 32.77. Now, we already have statistical probability on our side because it's an AI delivered play. And if we look down here at the Tailwind strategy right here, we can see we had 60.9% odds in our favor right off the bat there. So that's what I like to consider gold star number one. And then I also like to see any auxiliary patterns that might potentially play out, okay? So we had already put in the high here, we had put in a low right down here. We get the signal here while the stock is range bound, okay? So at this point in time, it did have the potential to come up here and exhibit an opening range break on top of the original signal that Holly produced, okay? So if we took a little bit right here with Holly, then let's see here, about 5, 10, 15, 20, about 25 minutes later, what do we have happening here? We've got that opening range being broken right about there where the orange arrow is. This would have been a great time to add to that position because we're playing that secondary, or what you might call an auxiliary pattern, on top of the statistically weighted buy signal a little bit lower, okay? So right here, excellent opportunity to add, bolster the position. And after that, we get a little, maybe 30 minutes of consolidation before just marching on up for pretty much the rest of the day here. The biggest part of the move happened after this opening range breakout. Now, on top of that, we also had decent volume. I don't think Exxon was raging today, but for a big stock with 4.2 billion shares in the float, finishing the day at 50% more than normal on the relative scale, that's a great sign for a big liquid stock like this, you know, where you got a market cap in excess of $100 billion and, you know, 4 billion shares in the float. Takes a lot of energy to move this stock in this capacity today, but lo and behold, that's what we had. So we had three, what I like to call 3 gold stars here. Number one, we had the statistically weighted entry from Holly. We had a secondary pattern play out on top of that where we could add, and we had really good volume on the Exxon trade today. So very good trade in Exxon, gave a little bit back at the close, but this was upwards around 800 and change when we were up here at the peak. Okay, so I see, Steve, you're knocking out the questions there, and Nicole, yes, we're talking about Holly right now. Okay, next on the list here, showing some nice big spread between conservative and moderate profit. This Victor David Edward. Now, we've got kind of the same thing playing out here.
Can I point out something real quick? Both of these last 2 stocks have been energy plays off of that, like that
That
OIH
is true.
component
That is true.
that I showed earlier. So the AI was sniffing out where the action was in that sector.
Mm-hmm. XOM, VDE, Vanguard Energy ETF. So this is the tracking ETF. It's not actually a stock. It's an ETF based around the energy stocks. So Steve is absolutely correct here. Exxon and then VDE, which is the ETF. So looking very similar to the Exxon pattern because they're in the same industry. Got a nice statistically weighted call. Hey, the exact same strategy also triggered VDE here, and we got the same type of thing playing out. Now, let's just kind of go in reverse order here. How do we finish on the day? 2.17 on the relative side here. So volume was always there. That's gold star. Number 2, we got the gold star because we got the statistical weight from Holly right down here. And then we always had the chance of that potential pattern playing out up here in the form of an opening range break. So we also had a great time to bolster, double up, add 50%, whatever your risk tolerance is there. And then basically the same type of pattern as Exxon played out here. Nice add opportunity, a little choppy chop sideways here before just kind of meandering on up to highs for the rest of the day, giving a little bit back, but keeping a lot more than Exxon did in that final pullback there. So once again, statistical weight gives us the first signal, auxiliary pattern plays out in the form of an opening range break, and we've got decent volume coursing through that trade. So, you know, Takes a little bit of time to get used to identifying all three of these factors. I mean, the Holly part is easy. Holly's kicking it out, so we know we have got statistical weight, but when you can be predictive and go, okay, if it gets up here and breaks that opening range break or any other pattern that you like to play as a secondary entry there, that's the way we do it. Now, also too, we are looking at 5-minute candles here, and you can see, just like on the 15-minute typically, that fast line still in charge on the 5-minute as well, and it was the same thing with Exxon. So note the shaded area here. Why did Holly get out? Well, she made Exxon the whole way on the timed hold, but on this one, a profit save was initiated. And that, you know, that little downtrending price action right there is probably what spooked Holly out. Well, it's not going the way that it's supposed to anymore, and over time, she's got that option to execute that profit save. But all we had to do here is take a leak and take a peek there, Freudian slip, and just wait out this little consolidation area here and be patient, and then we could have enjoyed the rest of that upswing there. All right. If I tighten this line up a little more, we got the first break right here, and this is actually even another good indicator as we tighten up for about 30, 40 minutes here and then punch on through again. So just some very good price action from Victor David Edward as well as Exxon, and some really nice spread between conservative and moderate profit here. And by the way, since there are new people in here asking about Holly, probably a good time to talk about the differences in these conservative and moderate risk modes here. So conservative is obviously the most conservative mode. There are 5 reasons why the AI could close the trade out in conservative mode. Either a profit target gets hit, a stop loss gets hit, or the timed hold expires. Those are the 3 primary reasons. The 2 additional ones come in the form of profit save and reduce risk, kind of refer to those as audibles. And so that's why Holly got out here. And a lot of the times on profit save and reduce risk, all we have to do is size up the chart and go, you know what? This trade's holding up really well. You know, we're already in the money. We're going sideways for a little bit. Maybe take a look at the daily, see how much room we might have to the next level of potential supply or resistance, and then make that decision. I will ignore the AI's conservative profit exit because I think I might have more in this trade. And clearly in VDE, that was the case. If we were just been patient and ignored the exit signal right about here, we got to enjoy the rest of the upswing there. Okay, what does the 2.17 mean? Let's see. I'm trying to figure out what column that might be there. I'm not really sure what column you might be referring to. Oh, okay, Steve answered the question there. All right, perfect. So any more conservative profit here to take a gander at? This one's not so big, but let's just take a peek. Now this one not so easy. Once again, the shaded area here, we got a $32 loser in reduced risk. If we would have stayed in it, we would have made 38 as opposed to losing 32 here. But you can see here on the downturn, Holly just decided to call it quits. All we had to do was sit with it. It'll ground back up here, but that was not the one I was looking at. I was looking at Hain here. This one would have been hard to sit, okay? We get the entry signal here. We're up here at the top, bumping up against, what is that? That's my 200 on the 5-minute, so we're not gonna really pay a whole lot of credence to that. It did happen to bounce right, you know, bump its head right on there, but it would have been really hard to sit this one back through your entry level in hopes that it would be higher on the close. So once again, just wanted to take a look at that one. Big $50 difference, clearly a lot different than the quality plays that we saw in VDE and XOM there. So VDE, once again, a great ad opportunity. I think I forgot to mention that, but really good ad opportunities in XOM and Victor David Edward. Now, the other thing that we like to talk about, other than conservative and moderate spread and maybe good add-ons, are trade arounds. And typically I associate trade arounds with positions that the AI has been stopped out on. So now let's flip this over so we can see the stop outs, which we had 3 of those today. And I do believe, let's see, LI was a good candidate. Notice what happened here. Got the buy signal here, we hover around, and then pretty much immediately within 5, 10, 15, 20 minutes, we're stopped out. We take a little bounce up, spend some time below the stop area here, but eventually comes back up here and reclaims the stop area. And notice what it did after it reclaimed the stop area. 1, 2, 3, 4. We got about 25 minutes of consolidation where the stop area has in essence begin to act as a pivot or a short-term area of support, okay? When they're down here, they're not really of interest to me. What I'll do typically is if I see them through that stop area significantly, I'll just set a price alert, all right? Just come up here, right-click in your chart, set that price alert. If the stock does get back up there, then you can continue to monitor it and see how it behaves, all right? At first it couldn't hold it, comes back up here, then it acts as a little area of support, and then we get a move not only back up to the original entry line, but a little bit above it. So a good example of a trade around. A little bleedy, not the best example, but it still fits the definition of what I like to call a trade around. Let's see, there was a little bit more stable one, I believe, in AMAT, even though it wasn't a stop out, okay? Check out what it did. We got up a little bit, things started peeling back. Holly went ahead and conservatively made $24 in it on AMAT. Now, as the day progressed, look what it did. It made its way down to the stop area, but look how it reacted once it got down there. Little dip below, little wick, right back up, little pop up, gravitates back down to it. So clearly this one was behaving a lot better than the one we just looked at here, okay? Coming down, tempting, popping back up, coming down, tempting, popping back up. So, you know, whether you took a little bit right here on a price alert or whether you just saw it in real time and went, you know what, this stop area seems to be acting as a very nice pivot point, all right, or what you could call short-term area of support. And the goal on these is to get close to the stop area in hopes that we return to the original signal and maybe even in some cases higher, like what we did on the close there. Now let's just take a peek. Let's see, yep, LI and AMAT, those were the only 2 decent trade arounds, or what I feel fit the mold for two decent trade arounds today. So that's about it for the Holly highlights today. But not a bad performance considering market conditions. Hold on, I just want to get this back here. There we go. Moderate, come on. There we go. So not a bad performance from Holly today considering market conditions, and not bad totals down here if we kind of cycle through. Conservative risking $100, up 400 and change. Of course, this does not consider commissions or slippage. Moderate coming in about 475, and aggressive, just buying things and holding into the close, about $761 on 15 trades, risking $100 each. Is Holly ever going to take a vacation? I don't think so. We've kind of banned her from vacations. Sometimes she takes an involuntary vacation when she's very silent, but that's not anything that we can control. All right, moving right along here. Really good action from my high volume tickers today. Some high quality patterns, and eerily enough, looking very similar to a couple of weeks ago when we set up a watch list with the smoke and fire top list. We're going to revisit that. I'm going to show you guys some high quality orbs that were triggered through my 2 favorite windows today, both on the long and short side. But before we get into that, I want to revisit last week's price alerts that we set based on the Nifty at the 50 top list that I handed out, looking at those stocks kind of, you know, hovering, bouncing off that 50 period MA. And then putting one more little spin on those. They were gap stocks, so we were looking for when they got back up through the gap, would that be a good strategy to begin embracing? Okay, so these are all the price alerts that we set last Monday, I'm pretty certain. Yep, 26th. This one was just a different one down here. But as we can see, these were all the ones from the 26th. And we had a good, let's see, 1, 2, 3, 4, 5, 6, 7, 8. Yep, thought we had 10. Only 4 of those have triggered thus far. So what is this data telling us? Okay, we've got 1 in the money, 4 cents, and then we've got a couple of mid-range losers, and then we would have been down a little over 2 points on the NCR trade. So the mere fact that all 3 of these are in the red and we got one that's basically flat, what is that telling us about top heavy stocks? It's telling us that there's no follow through right now. They're going up there, they're filling those gaps, but they're peeling right back over again. And based on market action of late and everybody's sentiment, seeing this data only confirms what we've been talking about for the past couple of weeks leading into the election. There's not a lot of follow through to the upside right now, and in the things that are, you know, they're bouncing off their 50 period, but by the time they get back up to that next gap, they're peeling back over again. So tells us a little bit about the market, and that's probably going to be true for the next day at least. And then, hey, once the election's over, well, it ain't over. I mean, it's still a long ways till any type of inauguration occurs. So, you know, one thing that we can be certain of is there's going to be a lot of uncertainty in the markets over the course of the next couple of weeks, maybe even months. So we want to keep setting alerts like this to give us a little bit of a vibe about, you know, how are these plays reacting? How are these plays reacting? And then hopefully try to gravitate to the ones that are doing well. So since me and the boys have just basically said, you know what, if we're going to do any trades, they're going to be intraday scalps. You know, of course, scalping is the harder, you know, of the trading styles. We always like to talk about good swing trade setups because it takes a lot of the noise out, but we have to adapt to current market conditions. So having said that, let's just jump right into the opening range breaks that were produced today by my favorite 2 tickers here. And the good thing about these guys is there's not too many signals coming through them. In my older versions of Turbo Breaks Up, I was focusing on the 1-minute volume metric and been doing that for years, but I've grown affectionate of these windows as of late because day in, day out, they have not been disappointing. As long as you're attentive to these windows and paying attention and waiting for the right timing, they seem to deliver some good plays each and every day, all right? And these are all based off of high relative volume, all right? Kind of going the opposite direction. Instead of looking for the pattern first and then hoping there's volume or hoping it goes without volume or hoping it goes on, you know, so-so volume, we're just making sure the volume is there. Pattern then becomes secondary. And for one reason or another, don't know exactly why, it still seems to be the lower price stocks that are making these moves, okay? Not saying that the higher price stocks don't do it, but for getting plenty of good things with the low dollar stocks, so be it. You can always up the price, which I currently got set at 17, but enough of my babbling. Let's go ahead and check out what these guys produced today. So remember, the goal when we're looking at these stocks, it's all about timing, all right? It's going to be spitting things out, hitting highs with that high relative volume, but all we have to do is see if it's fitting the pattern that we're hunting. And when we're talking about the opening range break, you're going to be hard pressed to find a more simple pattern. So let's just jump right in here. First on the list, well, let's do this one first. Let's do SUP, okay? For those of you who remember the Smoke and Fire top list that I handed out not too long ago, the first versions were pointed to a custom list. This version is just looking at the overall market and even looking at higher relative volume. So in other words, I'm just saying, show me a very simple list of stocks not over 10 that are exhibiting 15 relative volume, because a lot of the times I can get double confirmation, all right? SUP was one of the stocks that did that today. So 30 minutes in, checking things out, a little bit less than 30 minutes in. What do I see right up here at the top of my list? I see SUP. I'm like, hey, what's up? Pull it up, and this is where Smoke and Fire was flagging this extremely high relative volume. And I'm thinking to myself, well, this is right up my alley. This is typically what I like to see. So at this point in time, where we've already put in the high and the low and we're range bound, we can get predictive and go, man, this thing's cranking out the volume. What are we going to do here? You know, do we think this thing's going to break down or break up? Break up was the right call today. So all we had to do is pick up a little bit right here, right around the $1.50 area, use a $1.42 or $1.39 right outside of that low. That's a very low risk, ladies and gentlemen. And as you can see, never got down to that stop area. Now, if we're going to be precise here, you know, on the range break right here, I get alerted to the stock early, okay? So we can pick up a little bit here, and then just like the Holly plays that we were looking at earlier, if it comes up here and breaks this range, it should be coming through this window. And of course, it did. Boom, right there, right where the blue arrow is. So really great opportunity to get a little bit here, low risk, as it cracks the opening range break here, yep, as well. And then if we're playing just off the opening range break, 5, 10, 15 minutes, look at that prior 15-minute low, and we would have risk assessed right here. So if we're buying it in here, low of the day, buying it here, a little bit higher risk, or you could have kept your original, but the bottom line is this one did not disappoint, okay? Got off to a great start. Now, check out the red line here, okay? This is part of the alert that we're using. When I click on it, since we're using the new high, the red line indicates the next area that may act as short-term resistance, okay? And being very close to that level as we broke, came up here, took a little pullback, and then whammy, came back up through it, ebbed and flowed, and put in a really nice gain today on SUP. So original signal coming around $1.48 from Smoke and Fire, confirming through new T high around $1.57. So we'll just use an average price of about $1.50, and we topped out today. Let's see, why do all my data disappear there? Sometimes that happens. Anyway, we topped out just a little over $2, all right? 208 to be exact. So from a percentage basis, $1.50 going up to 2, hey, that is not too shabby, all on a trade that was pretty pain-free. We were never out of the money on this one. Had to sit a little bit of a pullback from the opening range break here, but a beautiful trade nonetheless. Oh, how do we finish on relative volume today? Only finished at about 146 on the relative volume scale, okay? And that's what we like to see. Float, not so bad. 20 million shares is typically considered a low float. So when the volume comes into these things, 3 million shares over 20, we're gonna get some nice movement. Yeah, Liliana, I see your question there. I'll be happy to drop the Smoke and Fire top list into the chat here before we're done, and I'll be happy to drop these other 2 alert windows that we're showcasing in there as well. But the beauty about the Smoke and Fire top list is it's just showing us stocks that are exhibiting 15 times relative volume, and typically after the first 15, 30 minutes, there just aren't going to be that many stocks out there exhibiting that type of relative volume, but this window is going to tell you about them, okay? So it's a very simple tool, but in my opinion, it's very powerful as well. All right, little time check, moving right along here. I better get busy. I'm rambling a little bit. Okay, so next on the list from the upside range breaks, this little guy right here, E, all right? Talk about a low floater. We had 1. Oh wait, that's a B, okay. So not a low float stock, all right? But decent relative volume, 4.0. A real clean entry right here that we can see. Put in our low, put in our high up here, put in our low. We come back up here, start pecking at that high, right about the 1451 level. Risk on this one, if this is the entry bar, 5, 10, 15, you can see this is the risk area right here. So a very tight risk area, and we could probably fold that risk area at least 3 times into there, probably a little bit more, probably more like 3.5 to 4 times. So original entry right about 1450, and topping out right about 15 there. So once again, from a percentage basis, not too shabby, but really it's all based around how many are. If this is risk, we want to try to make multiples of our risk, or what we could call R, and this one fit the bill just as good as any other one today. Not quite as a big percentage mover as we saw in SUP, but not too shabby nonetheless. All right, Jim, I see your question there. Is there a way to see the timestamp for the smoke and fire tickers? Well, since this is a top list, okay, it's just going to show us 30-minute clips, or excuse me, 30-second intervals here as the market is open and even into the post-market here. It's just going to update every 30 seconds because sometimes a stock might be hitting 15 relative volume, but as soon as it drops down to 14.99, it's going to drop off of the list. So the nature of this list is it'll have a lot more stocks on the open because volume is really cruising on many stocks. But as time progresses, you'll see more and more drop off because I don't really care if a stock's doing massive relative volume the first 5, 10, 15 minutes, because that doesn't really mean anything because a lot of stocks are doing that. But if it's still maintaining that solid relative volume, 30 minutes into the open, and then I look at my single stock window and I see that these levels here, well, not really on the 5 minute, the 1 minute anymore, but if I still see really healthy volume levels on the 5 minute, that tells me, yes, relative volume should maintain and potentially even go up. But if relative, or excuse me, a 5 minute volume had sunk down below 100, that would give me a little pointer, hey, unless this volume ticks back up, this one's going to fall off the list as well. So hopefully that makes sense. All right, so getting back on track here, we got E. This one also an extremely good mover today, TCDA, which was brought to my attention right here as it popped that high, right about $5.87. So not including the entry candle, 5, 10, 15, you can see the bottom of that wick is our risk area. And then we got a nice progression here, all right? Got to adjust that up a little bit. But we could pack that risk area into the reward area multiple times as well. So a really great mover on TCDA today. Did we have that volume? Did it stick around? Absolutely, finishing at 4.82 on the relative scale. So some pretty good quality plays here. And I was really surprised to see this many setups again. And what are we noticing here? We're noticing, once again, that short-term area of potential resistance was just blown right through. And last here, little CVA, okay? So more of the same here. This opening wick kind of, ruining an even better price of around $9.89, but if we're playing by the rules, we have to include that wick. So we shave off about 11 cents there in opportunity cost, right about the $10 level there, not including the entry bar. We go 5, 10, 15. That's how we assess our risk here. Probably the least best performer today as far as percentage goes, because we could only pack this risk area maybe 2 times, have a little bit left over, but hey, 2R, we'll take that as well. And once again, notice the 10 period fast line, even in the 5 minute, still maintaining control and topping out here before taking a little pullback, before grinding up for the rest of the day, and finishing off right about the 1044 level. So once again, from 10 up to 1040 and then finishing the day 1044 from a percentage basis, that's some really good returns in the smallest one out of all the ones that I just showcased there. So some really quality setups still produced by the new T high today without too much overload as well. And once again, let me just reiterate, it's all about the timing, okay? It's all about the timing, because here's the choice spot. If we are out of this spot, we're no longer in the choice range, okay? Once we're broken up here, yeah, you could try to take a chance on it, but then you're gonna have to sort of pull back here, all right? If we got it right here, anywhere in that candle, as it's breaking, we're gonna be up a little bit, and we can feel a little bit better about sitting a little bit of a pullback here. But in the end, what matters? Our hard stop. And the hard stops kept us in all of these today. This was probably the biggest pullback that was thrown at us, just a little bit below the entry line there. All right, one more time check here. Got just enough time to rattle off some of the decent shorts as well. And so what are we looking for on the short side? Same pattern, just inverted. First on the list here, DBVT. All right, so once again, a lot of hemming and hawing in the first 30, 45. Let's see, this one came around right about an hour and a half into the open, but it gave us a nice picture, okay? Little wicks, you know, some big bars up here. Well, I don't know why that's, wanted to grab my bar there. Okay, but we get this nice little tame area leading up to this range break here, all right? All this shenanigans is done. Here's the entry bar here. We go back 15 minutes, and that's how my risk line got pulled down because it's attached to the words there. But that's our risk level right there. We make the short coming through here, 225. This one just cooperated most of the day, finishing right down here at $1.75. 223 down to $1.75. Once again, small dollar stock. I don't have any problems trading small dollar stocks. All I care about is that percentage move and the risk versus reward. And you can see clearly, risk versus reward, we'll take that all day. All right. Quick word about Tasty Trade. I don't know if anybody out there is trading through Tasty Trade, but I opened a small account there not too long ago when the small exchange products made their debut, because I wanted to play around with those small exchange products, which they're pretty cool. You know, they're little indexes of groupings of stocks that they've put together. You know, there's a precious metals one, there's their 25 index or whatever. And the cool thing about those small exchange products is they're not, you don't have to adhere to the pattern day trading rule. Okay, so you can make as many trades as you want, but once again, it's trading, and even trading those products, you can circumvent the PDT, but still ain't easy picking market direction or, you know, sector direction. Having said that, I stuck around to, you know, trade some equities there because they're one of the commission-free broker dealers. Unfortunately, Brokerage Plus is not plugged in, but maybe in the future it will be. But what I've noticed about Tasty Trade, I've never been rejected on a short sale, even on these smaller dollar stocks, okay? So from what I can tell thus far, Tasty Trade's got a pretty decent short list, okay? And even on the small ones. So DBVT was pretty good action there. Another small dollar stock here, MICT. Once again, setting up very nicely, put in the high up here, take this little consolidation rest, and we pop through right about there at 213, and just a well-behaved, nice controlled selling all day and finishing pretty weak into the close. So not a lot of worry on this trade either. And once again, very tiny risk area. We could probably pack that guy in there at least 4 times. And that's what you want when you're trying to assess risk versus reward. All right, we're getting a little short on time here, so I better boogie. Last one on the short side was CASI. How do we finish? Let's see. And once again, let me backtrack here. MICT, 2 on the relative scale. DBVT, 156 on the relative scale. And then CASI here, finishing, closing 2.8 on the relative scale here. This one a little bit more stretched out, not quite as pretty as the other ones, but a range break is a range break nonetheless. Somehow my lines got all messed up there, but 1, 2, 3, 4, 5, 25 minutes in. Take a stab at this one as it's penetrating that lower end there. 1, 2, 3, risk is back up here. So not near as pretty as far as the risk to reward ratio goes on this one, but I need to adjust down here. Now it looks a lot better, but still over a, I'd say a little bit over a 2R on that one. Just a nice controlled sell, chopped around the entry line for a good 30, 45 minutes, finally released. But when it did, you know, we got some action, 235 all the way down to below 2, pegging out at $1.97 on the low. So low dollar stocks, but still kicking out some really nice percentage values. And that's about all I got for the opening range breaks for the upside and the downside today. So before I forget, what I'm going to do is I'm going to pop the Smoke and Fire top list in there. And once again, as you're watching this list, you're going to see some thin stocks show up on the list, things that you would never trade. Like when you see AICA with a plus sign, what in the hell is that even, okay? But rather than filter this window and potentially miss out on something, if I see something like this, which appears to be some type of weird IPO, I just dismiss it, okay? And then you'll see the more liquid stocks on there, that DNK. Once again, not a bad move from a low dollar stock. I didn't play that one today, but the bottom line is this: I'm leaving this one wide open and just manually perusing the symbols. But obviously, when you pull up stocks like this, if you're like me, you're just like, no, thank you, until you see the liquid ones like SUP today. Okay, so that's why I'm not putting any filtering on here. Just a maximum price, which you can easily change, or the relative volume. And these are really nice companion windows. If you see them here, and you can make a predictive move, and then you see them come through here as they're breaking up or down from their range, that's a great secondary pattern or time to add to the position. So I'm going to go ahead and throw these into the mix as well. There's the upside, and here is the downside. All right, so all the symbols that we just talked about, now you have the three windows that generated them, and once again, it's all about just waiting for that pattern to emerge and not chasing, and being what we like to call discipline, okay? And sometimes on these tickers, you're gonna have to filter through maybe 5, 10 symbols before you see one where the timing is right, and sometimes it takes more than that, but it all kind of depends on the day at hand. Sometimes it's fewer, sometimes it's more, but I think you guys get the gist of it. All right, so we got about 2 minutes here, so I guess I better bring Scott in so he can tell you about the upcoming test drive, as well as a few ways to save a little bit of money if you don't want to wait for the test drive. You can go ahead and subscribe now. So Scott, if you're with us, we're ready for you.
Yeah, we've got an ebook about earnings season that we're going to start promoting a different ebook. So if you haven't grabbed this one yet, grab it now, trade-ideas.com/earnings. It's got some strategies in there you can put in your layout to help you out with earnings season also. And the test drive is coming up starting November 9th. It's a 2-week test drive. These are our most popular events. You do them every quarter or every other quarter. So it lets you take Test Ideas Premium for a test. We do charge $8.99 to cover additional data fees and support. But just go to trade-ideas.com/test drive. There'll be special live training during the day, and it's always super popular. It's a great way for standard subscribers to try out premium features without obligating yourself to a premium subscription. That way you can decide if it's right for you. And if you don't yet have a subscription, it's one of the best ways to try us out. We have a podcast. We've got some episodes up this year that have been well reviewed. Trade Ideas Podcast is what you search for. Just hit subscribe and you'll be ready to catch the next one when it comes out. If you decide you want to start up today and save some money, use the code Fall Savings. You can use that either on a new subscription or an upgrade to premium. And you can find Jamie on Twitter at QuantBot. Steve Gomez is at Today Trader. We also have at Trade Ideas. Facebook.com/Trade Ideas Pro is the Facebook page to share with your friends, and just send any questions to info@trade-ideas.com. It goes into our help desk. Doesn't get lost, gets you the answers you need quickly. All right, thank you, Jamie and Steve. I'll get that recording up a little bit later on, and if I want to get a reminder tomorrow for the webinar. Guys.
Thanks a bunch, Scott. Steve, thank you for your input, and I want to thank everybody for popping in to hear what we have to say, and we'll see you guys tomorrow.
All right, cool. See you tomorrow.